Okay, fine. All right. So HLC, okay, I'm going from the beginning. So these 4 or 5 days, I will just repeat everything what we have learned so far, right? Okay. And then so that you can have a good revision for that. So introduction to Wyckoff method. If you want to know about Wyckoff method, I will just give you the short links, okay, which you can just go and see, right? Okay. Now there's, if you write down Wyckoff method, okay, if you Google this, right, Wyckoff method, you will see the link by stockcharts.com, right? If you just click on this link, this will give you an overview of the entire Wyckoff method, okay? Okay, the background history, okay, and the Wyckoff cycles, the Wyckoff laws, 3 laws, okay, and then trading range analysis, how to analyze the trading range, the Wyckoff events, okay, phase A, phase B, phase C, phase D. I think you know most of these things, right? You have, and then spring and shakeouts, testing, everything is written over here. Accumulation, okay, and then we have distribution, part 1. We have distribution, part 2, okay, and then we have this one, supply and demand analysis, okay, comparative strength analysis. We have 9 buying test of selling, buying and selling test, Wyckoff test for accumulation, okay. How do we know that if something is accumulating? You know about this higher lows, you already know, right? Higher highs. And we have this, okay. Then we have Wyckoff selling test for distribution. Okay, so this link will give you an overview of everything you need to know about Wyckoff, just an overview about everything. If you want to refresh your knowledge, you got it?
Yeah. Okay.
All right. And then if you want to understand more like why does this method came into play, like how this method is this method really valid for a long-term trading, short-term trading, if you want to. So there's an article in Business Insider, okay. So if I just go to Wyckoff Stock Market Institute, this is the institute where I took my education, okay. Wyckoff Stock Market Institute, Wyckoff SMI, okay. So yeah, this is the So this is the Wyckoff Stock Market Institute. Okay, this is the one which was actually developed by Wyckoff. So, okay, all right. So this will give you, there's an article, okay? Then the article, I took this Unleashed course, Wyckoff Unleashed course, right? So you don't have to take it. I'm just showing you that there's one article about it where, okay, yeah, click here for a free lesson, click here for a full history. This is the history of Wyckoff SMI, the complete history, how it started. Okay. All right. And then if you go to the home page here again, yeah, this one is presenting the secret trading strategy. Okay, presenting the secret trading strategy from 1930 that hedge fund managers don't want you to know. Okay, this is the article published by Business Insider. This is a famous magazine, you know about it, Business Insider, right?
Yeah.
Okay, all right. So this gives you the overview. How does the Wyckoff method come into play? What is the, like the Wyckoff, this is actually the terminology is like, how does Wyckoff come into play, right? How this method was developed. Okay, for example, here the Wyckoff, if you go through this entire article, you will understand how they say that the whole move is manufactured. Okay, it means that whatever happens in the market, it is all manufactured, like smart money or the big banks, they move the market the way they want, right? It's not like there is nothing like technical analysis or fundamental analysis that would work. Nothing works, okay? What works is anyone who has a bigger position and bigger size, okay? Like the trading size, okay, his trade will have a deeper impact on the market than other people. For example, just give you an example here. Let's suppose if I just give you an example of this one. Okay, let's suppose there is a buyer now. Okay, the total buyers. Let me increase the size of the text. 15. Okay, we have the buyers. Okay, total buyers are 100 buyers. Okay, and total lots. Okay, the total lots of all buyers are, let's suppose, 300. Okay, the sellers are 50. Okay, and the total lots by sellers are 1000. So what do you think, who will move the market? Because the sellers appears to be lesser than the buyers, but still, who will move the market? So what happens? What moves the market is not the lot size. It is not the number of sellers and number of buyers. It is actually the demand and supply. What is demand and supply? I tell you, the demand and supply is actually, we will calculate the buying power. Okay. So what is the buying power formula? The buying power formula is number of buyers multiply by total accumulated buying size. Okay, the total accumulated buying size, which is in lots. Okay, this will give you the buying power. So according to this formula, the buying power is what? The buying power is 300 multiply by, as you know, 100. All right. So this gives you what? 300 multiply by 100. This give you 30,000, right? And how about selling power?
Yeah, right.
How about selling power? If we just consider selling power here, the selling power would be number of sellers, the same thing here. So I will copy the formula here. Let's do it quickly. Selling powers. Okay. Selling power is number of sellers. Sellers, okay. Multiply by total accumulated selling size. Okay, selling size, which is in lots, is equals to this one, right? Okay, so selling power is, we have number of sellers is 50. All right, let's suppose in the market. And the total number of buyers are how much? 1000. So the total number of sellers, the total accumulative power, the total accumulated selling size is equals to total lots, right? So that is 1000. So 50. So this gives you what? 50,000. So can you tell me which one is more greater, buying power or selling power?
Selling power.
Okay, so let me give you an example. Buying power is equals to demand. All right. Selling power is equals to supply. Got it? All right.
Yep.
So obviously, with this formula, when demand is greater than supply, what will happen? Price up move. Right? When demand is equals to supply, then it would be what? It would be trading range. Okay, right? When demand is less than supply, then what will happen? Down move, bearish move or down move. Got it? So that was the point of Wyckoff. The Wyckoff used to say that the market moves in terms of supply and demand. When what is supply? Supply is the buying power. I have already told you how to calculate buying power, and I've already told you how to calculate the selling power, right? So in the MetaTrader 4 platform, you cannot see the buying and selling of the actual buying and selling of the people, right? Because the MetaTrader 4 does not have this functionality. But if you go for MT5, which is MetaTrader 5, it will give you a functionality. And there is another one platform, which is Global Prime Trader Evolution. Okay, this platform, and the third one is a C Trader. Okay, I will write down the names of this platform shortly, but let me open this one. Okay, so let's open it. Okay, now let me show you the actual buying and selling in action. Like, what do I mean by actual buying and selling? You will understand now. Now, this is a price, right? You see this volume here, right? Did you see this price moving here? This is giving you the size and everything, the total. Okay, see here the total buyers are this one, 5, the buying power, 15. So you can see from the above one, which is more higher, buying or seller. This is 7, 9, 7, 9, 1, and here 5. And you see the price is moving up. Can you see?
Yeah.
Because of this, because the buying power is much more greater than the selling power. You see, we have 10, 15, 20, 25. These are price levels. 50, okay? This one all, okay? So that's why the price is moving upside to the upside, right? Here we have 5, 1, 2, okay? Very, very few, right? Okay. This shows that the selling power is not much greater than this one, right? So buying power is much more greater. All right. And then the volume as well. You can see the volume confirms everything here. We are coming out of accumulation zone. Okay. And you can see the increase in volume. Okay. The increase in volume at this point. All right. You can see that is jump across the creek. Possibly this is jump across the creek. Right? This is jump across the creek. JAC. And then this test. After test, the price shoots up. Here as well, I told you. And after JAC, what happens? So this is actually what? Accumulation or reaccumulation? Can you tell me? This is a 1-minute chart. This is
Reaccumulation.
This is reaccumulation because after jump across the creek, we have a reaccumulation here. So price will test this region here at this point, and then it will shoot up, right? And you can see the power, buying power and selling power. You don't have to remember this buying power and selling power. That is something which you can learn later on, right? I will teach you about this one as well, but this is the order flow. Okay, this shows you entire buying and selling power. We call this as market depth. Okay, very famous indicator of market depth. All right, and then we have this one at this volume profile. Okay, this is volume profile on the side. So let me uncheck this volume profile. Let's leave it here, volume profile. Now, all right. This volume profile shows you where the most volume are accumulated. Now, if you see here, very easily from this bar, this is the point where most volumes are accumulated. For example, this point here. Can you see? The volume on this side is very high, and volume on this side is very high. Volume on this side is very high. It means this is a line of support and resistance. These are line of support and resistance. These are line of support and resistance. These peaks. Okay, this one is the horizontal volume, right? This is vertical volume. This is horizontal volume. This horizontal volume gives you. Now, what did I say you? Because buying power was much go greater than this one, obviously the price would go up after testing this region. Price come back, test this region, went up, right?
Yeah.
Yeah. So yeah, if you try to read this all, you can accurately read the market. You know, I will give you this indicator later on. Okay, and I'll set you up. And what you have to do, you have to just combine. So this indicator is for those people who are scalping. You know, scalping who are just trading for 1-minute chart. They're coming in, coming out of the market just quickly. For example, they enter here, they exit here. They enter here, they exit here. Okay, taking small lots. So it's like for example, if in one trade on a 3-minute time frame, you make around how much? Like let's suppose 2%. So they make 0.5% per trade. So they make 0.5% here, 0.5% here, 0.5% here, 0.5. So 4 trades. Okay, in 4 trades they make this kind of money. So and in just one trade you're gonna make it, right? So that's the difference here. All right. So this is how the order flow works. Okay, if I just increase the size, you will see it all completely. Now you can see it here. The size here, the size here, the size here, right? Okay, this is actual size coming where the sellers are coming. This point, this point. Actually, this is not very easy to read, right? It will take some time. So we have an indicator that shows you a consolidated information that at what time are the buyers more and at what time are the sellers more. Got it? You can see the time and price, average price, average price, average price. It gives you the entire information. All right, so now let's go back to this one. Okay. All right. So what happens here? Here he has explained that he is trying to pick 50 shares, but it's not too much. So what happens that in a trading range, when you have a trading range, for example, this is a trading range. All right. So if the smart money, what the smart money will do, the smart money will start buying here. They will buy here. Okay. Let me draw another arrow. Okay, arrow here. Yeah, he will buy here. All right. At this point, he will buy. Okay, he will buy here. All right. And then he will sell here. All right. Got it? And then he will again, the smart money will again buy at this point. Okay. And then again, what he will do, he gonna sell here again. Okay. And then he gonna buy at this point again. All right. And then this is the final buy. Now, why he's trying to do, why he's trying to buying here, sell here, buy here, sell here, continuously. This is a smart money. This trading range is actually created by the order of the smart money. You know about smart money?
Not really.
Okay, smart money are actually the collection of the big banks. Okay, because 90% of the forex volume, okay, the currency trading volume is actually, what to say, it is actually performed by, okay, the volumes, these real volumes, okay, all of these volumes actually comes from the big banks. Okay, there is a theory beside it. Okay, I will let you know now. For example, let me show you. There was a book here. I think it was a trading profile, volume profile book, right? Volume profile. The Insider Guide to Volume Profile. I think it was like this. The Insider Guide to Volume Profile PDF. Yeah, this one. So this book shows you a very different picture about how the market actually works. Okay. For example, if you go to this page, okay, and if you go here, on the first page of information, it will show you some information. You see here. Now, the this table on the right shows that roughly 80% of all currency volume in transaction is transacted by only 10 financial institutions. They have absolutely majority. They move and manipulate the price. It's their game. Got it? These are the banks
Yep.
which actually runs, like, which are responsible for driving the price of the forex market. The Citibank, Deutsche Bank, Barclays, UBS, HSBC, JP Morgan, Bank of America, Merrill Lynch, Royal Bank of the Scotland, BNP, and Goldman Sachs. So these banks are actually responsible for moving the price because 80% volume comes from this bank. Got it? And if you go further, he further say, okay, the retail traders, the small people, okay, the small people, they only contribute to less than 4.1%. Now you compare 4.1% with 80% volume. So who will, like which way the market will move? Got it? So it does not mean,
Yep.
okay, I'm not saying that all of these banks, they are trading in the same direction. They are not trading in the same direction. They may be trading in the different direction. Got it? But the point is that we consider all of these people, all of these banks as one trader, one big trader. Why? That's what Wyckoff used to say. Wyckoff said that consider this, all of these people as one big trader. Got it? Let me show you. Uh, he called that man as a composite man. Now, just this example. Okay, all right. So what happens here? The good news, the bad news come here. Okay, the market is already crashing. Do you see? The market is already crashing. All right. So this actually happened yesterday as well on GU. Okay, I go on a 15-minute time frame. Okay, all right. There was a news event, and there was a news event here. All right, here you see, the news event was that the price that the like the news was actually negative. All right, the news was negative and the people thought it was selling. Okay, the news was negative and people were just what to say, uh the negative news came out, so it means that the GU will go down, right? Yeah, this was true to some extent. But if you are a Wyckoff trader, you would analyze that, you would draw this chart here. Okay, and right at this point you can see this huge volume. All right, this huge volume transacting through it, right? If you draw this chart here, let's suppose, okay, there's a simple chart here, and the news came right over here on a very huge volume. Okay, it was at 245, and it's, and like as a Wyckoff trader, we know that, okay, we are actually reaching this point. Okay, we are in SOT phase, so we will not take in a position, right? We will wait. Okay, we will wait. And then people started selling right over here when the news comes out. So what happened? The price just went down for a few points and then the market reversed. So they missed the whole of this move to make money, the whole opportunity to make money. Like, got it? Just for catching this move, they missed this entire move. Got it? Based on news.
Yeah, maybe
Okay.
today also we can do a few analysis also.
Yeah, okay. Now the news is coming at this point, 7 okay, 7 p.m. Right? You can see here what will happen. Okay. And let's see backside as well. Let me open the history settings. Chart trading, scales, symbol. Where's the news? Events. Only, okay. Now you see here what happened. The news came, and what was the news? The news was actual was this one. So this is GU, that it was news on US dollar. You can see the US dollar flag. It was news on US. So actual was 10.08. Forecast was this one. So the actual, if the price is, okay, the thing is, what I want to explain you that if actual is equals to forecast, okay, is actually actual forecast, then nothing happens. Okay, the price remains happens. All right, if actual is actually greater than, greater than, right? Greater than forecast. So what happened? Good for the currency. All right. If actual is less than forecast, then it is bad for the currency. Got it?
Yeah.
Okay, this is bad for the currency. So this one is what? This says that actual is actually less than forecast. Am I right? So when actual is less than forecast, then it is bad for the currency. Am I right? So it means that the US dollar will crash, right? US dollar will crash. So GU will also, if US dollar will crash, then GU will go up. Am I right? Yes. So what happened at this point when, so because I told you when GU, okay, GU, we are focusing on GBP USD. So just tell me this, when we have GBP USD, okay, so tell me, when USD crashes, then GBP US dollar will do what? Can you tell me? It will go up or down, or it will also crash?
Go up.
Why?
It will make the euro stronger.
Huh? Okay, let
Not
me.
very sure.
Okay, yeah, we just ratio analysis. Okay, so let's suppose we have GBP. Okay, GBP. Can you see my screen?
Yeah.
GBP US dollar. Okay. So in the GBP US dollar, we have, okay, this is this one. So if we have this one is known as base currency. And this one is known as code currency. Got it? Base currency, code currency. So remember that. So GBP is directly proportional to GBP US dollar. Okay, there's the whole mathematical formula behind it. Okay, and then we have US dollar, which is inversely proportional. Okay, it's inversely proportional to GBP USD. Remember this rule. Got it? So it means when GBP, when the British pound goes up, GBP USD will go up. Got it? When USD goes up, GBP USD will go down. Got it? Because they are inversely proportional. Do you know why they are inversely proportional?
No.
Okay, it's very simple. Do you want me to explain how? Okay,
Yeah, sure.
okay, all right. So we have GBP US dollar, right? Okay. Let's do simple maths. It's a very, very simple maths. Okay. We have a GBP US dollar. GBP US dollar is equals to GBP divided by US dollar. Am I right? Okay. The
Yeah.
British pound is divided by. That's how, because that's how the exchange rate is calculated. Okay. In this GBP US dollar. Okay. So GBP divided by US dollar, right? So let's make it this one, right? So if we say that, okay, we are only considering if the USD news comes out, okay, and we say there is no news on GBP, then we can call it as K, constant. We can keep it as constant. So this becomes GBP / US dollar, okay, equals to K divided by US dollar, with K is constant, right? Then obviously we have to make K alone as a subject. Then what we do? We have to move USD over here. So GBP / US dollar, okay, multiply by US dollar is equals to K, right? And then what we will say? GBP / US dollar is inversely proportional. Am I right? To US dollar. Do you know about this?
Yeah.
Inversely and directly proportional. Yeah. So this would be inversely proportional. This is how it is calculated. The same thing goes for this one, obviously. Okay. So if we have, let's suppose, now in terms of okay, now here we have, you say GBP divided by US dollar. So obviously, now we have to keep this as constant, K as constant, okay? Constant. So what will happen? Now, if this is constant, what we can do? We can move this one here and this over here, right? Cross multiply. So K would come here and GBP would remain as a numerator and this would come down. GBP US dollar. Got it? So what happens if this is K? We can say that GBP is directly proportional to GBP US dollar. Correct?
Yeah.
Yeah, just a simple rule. Remember that. Okay. You can practice later. So next time when you are checking the news, you can just do some calculation mentally over in your mind. Okay. So with this rule in mind. Okay. And I've also told you another thing about this. If actual is greater than forecast, it's good for the currency. If actual is less than forecast, it's bad for the currency. So with this in mind, Okay, the news came here at this point. Try to okay, the news came here. The news was what? Actual is less than forecast. Am I right? Forecast is 11, actual is 10.698. So actual is less than forecast. So it is good for currency or bad for currency?
Bad.
Is bad for which currency? US dollar or GBP? This is US dollar news. You see the US dollar flag. So this is British pound news. This is US dollar news. See the flag here. So if it's bad for currency, so you see this, right? So it means that it's bad for currency. It means that the US dollar will go down, right?
Yeah.
Right. So it means that the US dollar will go down. When the US dollar will go down, then the British pound will go up. Am I right? So what happens? People know that the price is going up. People see the support. They started buying it. They started buying over here. Okay, they say, oh, it's a good news here. We're gonna just place this trade and we're gonna go up maximum point. Now the big people, the big traders, these people, they know that the people are buying. Got it? They know that the people are buying over here and they're gonna target the next line of support, which is this one, the next line of resistance, which is this one. Got it? They're gonna target the maximum high because it's a news, right? So what happens? They let the people okay, go for the small profit and then they crash the market against the news. Got it? That's why Wyckoff used to say that the whole move is manufactured because here it was a bad news. But after bad news, what happened? The price rose. Got it? Got it?
Yeah.
So in this case, okay, all those people who are doing like the fundamental research, all of their research has failed because they were in a buying position. And then you will see BBC, CNBC, and other media what they were saying. Okay, maybe some factors change, and then suddenly the huge seller came over here. Where is the huge seller? How do you know? How do you know that the big banks are going against? At what point the big banks started to go against against the people? Can you tell me? At what point? Here they bought. But at what point they started to go against? They started to go against at this point. Effort versus no result. Can you see? Small spread bar, huge volume. This is the first sign of selling which they did. Got it? And then they let the people, and then the price went down for a little. And so the people were not scared. They would say, okay, it's fine. It's only a little bit down move. And then what happened? Up thrust. A second move. Up thrust. And after up thrust, what do we notice here? No demand. All of these three signs, and then the price crashed. Got it? Got it?
Okay. All right.
Okay. Now here you see. This was news was actual was forecast. It means that actual is greater than forecast. So it means that the news is good. So when US dollar is going up, so what will happen? The price will. So when the US dollar goes up, then British pound USD will go down. So what happened? The price did go down. The people who were entering here, they entered here, the price did go down. I'm not saying the price did not go down. The price did go down for a little, and then the price reversed. Okay, it made an up move and then crashed. So those people who are just trading news and other things, they are doomed to fail. But if you are a Wyckoff trader, you would know that the price is reaching overbought right over here. Right? You would trade very differently from other people. Okay. And then you have this one, shortening of the thrust right over here. Okay. You would only trade. This is SOT formed here. And then the news came at this point. Okay. The news came at this point. And then you would know that the price would continue to go up now. All right. For a while. And then the price reached this shortening of thrust high. Okay. And you see the volume, the declining volume, huge volume over here, which is effort. And then you also see that there was effort versus no result, but you see the volume. It was a news candle, that's correct. But you see the bar spread and you see the volume here. So this is effort versus no result. Am I right? This is the first indication that the price will fall. Got it? It is totally
Yeah.
opposite. This is totally opposite of what you read in the, like in the newspaper, or you when you see the news. Okay, so all of these news are flawed, and people who just read the news, okay, they are just, like they are doomed to fail. That's what Wyckoff explains here when I was explaining about this one. Got it? So they are continuously selling here, they are buying here, selling here, buying here, and then they will move a last move, like, up thrust or overbought. After overbought, then that's the move when when the smart money will start to move the market in their in their what to say, in the in their own favor. Got it? So that's it. So we are here, right? So you know the links now. You can easily calculate. You can see, okay, how to get this book. I will tell you quickly. All right. If you just write down here, Google, the Insider Guide to Volume Profile PDF, right? You will see this website Trader Rail. Okay, you can go over here and read about the, like about this volume. Again, you can download it and then you can read a little bit about it if you want. Okay, then you can go to Wyckoff SMI website. Okay, from this website, there's an article right over here. Okay, Business Insider. All right, and then you have this one article here, which is the titans of technical analysis. Okay, so you will see those people who were actually the foundations, who laid the foundation of technical analysis. So there were 5 titans. Number one was Charles Dow. You know Charles Dow. He was the one who who just released the theory of Dow theory. You know Dow theory, right? You know about Dow theory?
No, not really.
Okay, Dow theory is when the price is in uptrend, then the price will make higher highs and higher lows. When the price is in downtrend, the price will make lower lows and lower highs. And when the price is neutral, then the price will make equal highs and equal lows. This is Dow theory. Got it? Based on highs and low structure, swing points. So swing point system was actually released by this Charles Henry Dow. Then there is NAF. Then there is Nelson Elliott. You know about Elliott wave theory, right? Very, very famous Elliott wave theory, right? Got it? So he was the second titan. The third one was W.T. Gann. He was a mathematician. Okay, and then there was Arthur Merrill. He is the one who was the founder of Merrill Lynch, Bank of America. Okay, he released the theory as well. He was a chartist. And then the last one is Richard de Wyckoff. These 5 people are considered as the what to say, they are the founders of the technical analysis. Got it? The method which we use today. Okay. So I have to start this video again. All right. So let's go for the second one.